Welcome to the Deep Dive. Today, we're digging into Viking Therapeutics. Their Q3 2025 earnings call just dropped.
Yeah, definitely a key name, right? Especially in this whole metabolic disease space, it's getting crowded.
It really is. And this call, well, it showed that classic biotech picture, didn't it? You've got this significant bottom line miss.
But, and this is the kicker, you also have these really pivotal pipeline updates, things moving forward.
Exactly. It's that age-old trade-off. Spending cash versus, clinical progress, speed.
Right. How fast are they burning through money compared to how fast they're getting results?
We've got the details here from the call, talking about that ramp up in R&D spend, their cash situation.
And the timelines, crucially, for their main obesity programs, that's VK2735, both the injectable and the oral version.
Okay, so our mission today, let's piece together what they said about the spending, that cash runway.
And, what it all means for their actual drug development, especially VK2735. Where does this position them?
Right. Let's get into it. Start with the headline numbers, maybe.
Makes sense. So revenue, no surprise there. For a pre-commercial company, it was zero. Right in the line.
Expected, yeah. But the GAAP EPS, the earnings per share, that was the eyebrow raiser, a loss of $1.81.
And the street, the consensus estimates, they were looking for something more like negative $0.67 to maybe negative $0.70. So a definite miss.
A pretty noticeable miss, yeah. So what happened with the stock you'd expect to drop?
And it did dip initially, right after the news broke. But what's fascinating and tells you a lot about this sector, by the end of the next trading day, the stock was actually up. Quite a bit, actually.
Really, after that kind of miss?
Yeah. It suggests the market, or investors anyway, they pretty quickly looked past the loss. They seemed to weigh the spending against the execution updates.
Decided the execution was more important.
It seems that way. They forgave the spending, essentially, focused on the future potential, the speed.
So this whole earnings story boils down to spending for speed. And that means R&D, right?
Exactly. Research and development, that's the engine driving the loss, but also potentially the future gains.
Let's look at that number then. How much are we talking?
Okay, so R&D expenses, they exploded this quarter. Hit $90 million.
$90 million in one quarter.
Yep. And just for context, compare that to the same period last year. It was only $22.8 million then.
Wow. That's almost 4 times higher. Where did management say all that money went?
They pointed to a few key things. Higher costs tied to the clinical studies, which are scaling up fast. Then there's manufacturing for the drug candidates.
Getting ready for potentially larger trials or even commercial launch down the line.
You got it. And also just hiring more people, salaries, as they build out the teams needed for these big pivotal trials.
So the overall net loss widened quite a bit then.
Oh, yeah. $90.8 million net loss for the quarter compared to about $24.9 million loss in the same quarter last year. It's directly tied to that R&D surge.
Okay, 90 million R&D, 90 million loss. That kind of burn rate sounds, alarming. How do they reassure people they won't just run out of cash?
And here's the other side of the coin, the balance sheet. This is where it gets really interesting.
Okay.
As of the end of Q3, Viking was sitting on $715 million in cash equivalents, and short-term investments.
That's $115 million. That's a pretty healthy cushion.
It's more than a cushion. It's the core of their argument. Management was very explicit on the call.
What did they say?
They basically stated, point blank, that this $715 million is enough to fully fund their main program, VK2735.
The dual agonist, yeah.
Right. Fund it all the way through the big phase 3 trials and also keep developing the rest of their pipeline.
So they're saying, yes, we're spending a lot, but look, we have the money already secured to get this lead drug over the finish line, or at least through phase 3.
Precisely. That cash runway narrative was critical. It took the sting out of the burn rate. It framed the spending as strategic, not reckless.
Got it. Okay, that makes sense. So let's pivot then. Talk about the actual programs that cash is fueling. VK2735, the star asset. Remind us, it's got 2 forms.
Correct. There's the subcutaneous version, the injectable, like many current weight loss drugs. And then there's the oral formulation, the pill.
Let's start with the injectable. What's the latest there? Phase 3, right?
Yep. The phase 3 program is called VANQUISH. It actually involves 2 separate large trials.
Okay.
There's VANQUISH 1, which is purely focused on obesity. And then VANQUISH 2, which is looking at obesity, but specifically in patients who also have type 2 diabetes.
And how's enrollment going? Because that's often a bottleneck.
Seems to be going well, actually. They said VANQUISH 1, and this is the really big one, targeting 4,500 patients. They expect to finish enrolling that by the end of this year.
End of 2025. That's fast for that many people.
It really is. It speaks to that accelerated spending we just talked about. VANQUISH 2, the diabetes cohort 1, that's expected to complete enrollment in Q1 of 2026. Still pretty quick.
Okay, so the injectable is moving full steam ahead into late-stage trials. What about the oral version? The pill, that had some issues earlier.
It did. Let's talk VENTURE. That's the phase 2 study for the oral drug. The efficacy data we saw before was actually pretty good.
Remind me.
Up to 12.2% weight loss after 13 weeks of taking the pill daily. And I think it was up to 80% of people in one group lost at least 10% of their body weight. For an oral, that's strong.
Right, competitive numbers. But the problem wasn't efficacy, it was tolerability, wasn't it? Back in August, the stock took a hit.
Exactly. There were concerns about gastrointestinal side effects, nausea, vomiting, that kind of thing. So management spent some time on this call addressing that directly.
And their defense.
They really hammered the point that most of these GI events were mild or moderate. And importantly, they tended to happen early in the treatment.
Ah, so the implication is maybe it gets better over time. Or maybe the starting dose was too high.
That seems to be the suggestion. That it's potentially a dosing or titration issue, not an inherent problem with the drug itself. They believe that adjusting how they start patients on the drug, maybe slower ramps,
could make it much more tolerable.
That's the narrative they're pushing. And it's crucial for the oral's future, obviously.
So what's next for the oral data? When do we hear more?
Soon, actually. There's more phase 2A data coming from that VENTURE study. It's slated for presentation at ObesityWeek, which is in November.
Okay, so that November presentation will be key. Everyone will be watching to see if the updated data supports their tolerability argument.
Absolutely critical. And right after that, or around then, they plan to formally ask the FDA for an end of phase 2 meeting, an EOP2 meeting.
Which is basically asking the FDA, okay, based on this phase 2 data, what do we need to do for phase 3?
Exactly. Getting a clear path forward from the FDA for the oral phase 3 would be a huge validation, a major catalyst for the stock, potentially.
Okay. This brings up the bigger picture, though. You've got giants like Lilly and Novo already dominating this GLP-1 space. How does a smaller player like Viking even compete? What's their unique angle?
That's the multi-million-dollar question, isn't it? And their answer seems to be focused on optionality, and maybe even more importantly, on maintenance.
Maintenance, as in keeping the weight off long term.
Precisely. They talked about a new kind of novel phase 1 study they've just started. It's specifically designed to look at different ways to maintain weight loss after someone has initially lost weight using the weekly injectable.
Interesting. So they're studying the transition from the injectable to something else.
You got it. They're trying to figure out the best way to keep people on therapy long term, maybe with something more convenient or a lower dose once they've hit their goal.
What kind of strategies are they testing in this study?
It's quite comprehensive. They're looking at switching people to a monthly injectable dose instead of weekly, or switching them to the oral pill, either taken once a week at a higher dose or taken daily at lower doses.
So injectable weekly to lose, then maybe oral daily to maintain, or maybe monthly injections. They're exploring all those paths.
That's the idea. Testing different modalities, different frequencies. Results from that study aren't expected until mid-2026, so it's longer-term thinking.
Well, why is this maintenance strategy so important? Why should, listeners care about this specific study?
Well, management believes this is key for two big reasons. First, patient persistence. Keeping people actually taking the medication for years is a huge challenge in chronic conditions like obesity.
Right, adherence drops off.
Exactly.
Yeah.
If you can offer a more convenient or tolerable maintenance option, maybe like a daily pill after the initial injectable phase, patients might stick with it longer.
Okay, that makes sense. What's the second reason?
Payers. Insurance companies. If Viking can show data that patients can successfully transition to a perhaps lower cost or more convenient oral maintenance therapy and keep the weight off, that's a powerful argument for reimbursement.
Proving long-term value and adherence. So the strategy is hit hard with the injectable first for maximum efficacy, then switch to the oral for easier long-term management.
That seems to be the strategic play they're exploring. It potentially leverages the best of both worlds, the power of the injectable and the convenience of the pill. It's a smart way to differentiate.
And are they working on anything else besides VK2735? Any other shots on goal?
They briefly mentioned their other pipeline asset, yes, an amylin agonist program. They're targeting filing the IND, the investigational new drug application, to start human trials for that one in the first quarter of 2026.
Amylin agonist. Different mechanism from GLP-1 GIP.
Totally different pathway. It works more on satiety, that feeling of fullness and slowing stomach emptying. It adds another potential tool to their belt, maybe even something that could be combined with VK2735 down the road. Diversification.
Okay, good overview of the science and strategy. Now, let's shift gears. It's time for our This Is Not Financial Advice segment.
Right, where we look at the market's reaction and maybe sketch out a plausible, if aggressive, trade idea based on the current sentiment.
And the sentiment here seems clear, right? The market totally ignored the EPS miss.
Completely. All eyes are on the pipeline velocity and those upcoming catalysts, especially the November data from ObesityWeek for the oral drug.
So the trade has to reflect that forward-looking focus, betting on news flow.
Exactly. Given that big post-earnings jump, what was it, 11.1%, and the options market is pricing in pretty high volatility, around 7.6% implied.
Suggests people are expecting a move around the November data?
Definitely. So the opportunity, if you're inclined towards speculation, lies in those near-term events.
Okay, pitch the idea. What's the structure?
We're thinking a long position, but using options to get leverage and define risk. Specifically, near-term, moderately out-of-the-money call spreads.
Call spreads. Okay, explain that quickly. Buying one call, selling a higher one.
That's it. You buy a call option, say with a $32 strike price, and simultaneously sell another call option with a higher strike, maybe $35, both expiring shortly after Obesity Week or perhaps timed around when we might get news on the FDA meeting request.
And the point of the spread versus just buying a call?
It lowers your upfront cost compared to buying the $32 call outright because selling the $35 call brings in some premium. But it also caps your maximum potential profit if the stock really rockets past $35.
So it's a defined risk, defined reward bet on a specific upward move.
Exactly. You're betting the stock will jump into that, say, $32 to $34 range relatively quickly on positive news. The rationale is if that November oral data comes in strong, especially on tolerability.
Or if they get positive signals from the FDA on the phase 3 path for the oral.
Right. Then the stock could potentially regain the kind of valuation or momentum it had before those August tolerability concerns surfaced. That could lead to a significant percentage return on the premium you paid for the spread. It's leveraging that existing post-earnings momentum.
Got it. A leverage bet on near-term positive catalysts driving the stock into a specific range. Okay, let's recap the whole call for everyone listening.
Sure. The main takeaway. Yes, Viking reported a wider loss than expected. That was driven by a huge but seemingly strategic increase in R&D spending.
But crucially, they highlighted their very strong cash position, that $715 million, and essentially said, we have the fuel needed.
Right. Enough fuel to push VK2735 through phase 3 for the injectable, while also advancing the oral version and the rest of the pipeline. They're spending aggressively, but they showed they have the cash to back it up.
It's a spend-to-win playbook, really, in this incredibly competitive metabolic drug race.
Definitely. And maybe the final thought to leave you with, the provocative question, is about that maintenance strategy.
Go on.
Given how intense this GLP-1 race is, how much will that November data really validate the potential for VK2735's dual approach? Can they truly convince the market and eventually payers that this transition from injectable to oral maintenance is a winning formula?
And how quickly will the FDA weigh in on that end of phase 2 package for the oral? Those are the key things to watch.
Absolutely. That EOP2 timeline and the reception of the November data could really define their path forward.
Okay, that wraps up this deep dive on Viking Therapeutics' Q3 call. Keep watching the data, keep analyzing the market.
And we'll be back to break down the next big earnings call.